I'm Dawson Schmidt here with the latest stories and updates in a Trader PhD Market Minute. Well, December 31st has come and passed, marking the end of the Phase 1 trade agreement struck between the U.S. and China in 2020. Yet some questions remain of what is to come for the rest of the agreement. Under the deal, China agreed to import $80 billion of American agricultural goods. However, when 2021 reached an end, China still fell short of what was agreed upon to purchase. More specifically, the country fell short of its commitments by $16 billion. To fill in the remaining gap of the Phase 1 agreement, USDA Secretary Tom Vilsack said that the White House would continue to push for China to make up for the $16 billion deficit in agricultural trade commitments. He said that it is important to build trust among farmers, specifically when it comes to enforcing trade policy.
And I think it starts with China. I mean, we all know and appreciate the fact that we have a Phase 1 trade agreement with China, and during that period of time we saw sales to China increase over what they were during the trade war. But here's the deal. Our Chinese friends are about $16 billion light over what they committed to purchase. And that's why Ambassador Tai, our U.S. Trade Representative, is going to China and continues to converse with China about the necessity of living up totally and completely to the Phase 1 trade agreement, making up that $16 billion deficit over the course of the next several years.
With little communication recently between the U.S. and China, the Biden administration will have some hurdles to push continued trade commitments outside of what is necessary for Chinese consumption and if the U.S. sees a potential Phase 2 agreement in the future. The USDA released a slew of reports Wednesday, which included the latest World Agricultural Supply and Demand Estimates report, the quarterly grain stocks report, and the winter wheat seedings. USDA projected 2021 and 2022 U.S. corn ending stocks higher at 1.5 billion bushels, which exceeded analyst expectations. Soybean ending stocks were projected 10 million bushels higher, while wheat ending stocks were seen 30 million bushels higher. In a surprise move, USDA projected Brazilian soybean production to yield only 139 million metric tons, which fell below CONAB's estimate of 140.5 million metric tons. The reduction comes as southern Brazil and Argentina deal with drought due to the La Niña weather pattern, and while some rains are expected to reach the areas, meteorologists say they won't be enough to reverse any damages to the crop. In the quarterly grain stocks report, USDA projected that corn ending stocks ended with 11.65 billion bushels as of December 1st, versus 11.29 billion a year ago. Soybean ending stocks rose to 202 million bushels to 3.15 billion, and all wheat stocks declined more than analysts expected, sitting at 1.39 billion compared to 1.7 billion last year. Winter wheat seedings estimates for 2022 rose to 34.4 million acres compared to USDA's final 2021 estimate of 33.6 million. The U.S. pork industry may see a boost in the future as USDA Secretary Tom Vilsack and Trade Representative Katherine Tai announced Monday that the Indian government agreed to accept U.S. pork and pork products. Vilsack said the announcement marks nearly 2 decades of negotiations to expand the U.S. pork export market to India, and it signals a positive movement in trade relations with the country. Groups such as the U.S. Meat Export Federation praised the Biden administration for their efforts to tap into new Asian markets. And while the announcement marks a milestone for future pork demand, pork does not make up a large portion of the Indian diet culturally. However, tapping into another Asian market adds for more potential for international demand for high-quality meat from the U.S. Thanks for listening. I'm Dawson Schmidt, and this has been a Market Minute on Trader PhD.